Good morning, traders from whichever side of the country world you're going to watch me from. My name is Ian Joseph, market analyst, HFM East Africa. And a quick disclaimer before we do begin: the information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but don't worry, I'm here to help you comb the markets the right way. Now, I want to start here. In the spirit of 15 years serving new traders, we have come up with a few bonuses that I would want you to look into. Starting off with the Shield 500 account. We do have an account called the Shield 500, whereby if you do deposit anywhere between $100 and $500, okay, $100 and $500, whatever losses you will incur within the first 25 days, we are going to refund you up to $500. Yes, you heard me right. Whatever losses you're going to incur within the first 25 days, you are going to be refunded. Now, not only that, we do have other promotions that are currently ongoing. If you go over to the HF website, and under the pure gold giveaway is the first one that most recently has been launched. If you do click on it, it's going to open another tab whereby you do have a chance to win 10 grams of pure gold. How do you join? You go over to your HF under promotions, join the pure gold giveaway, and then join the promotion. Now, for this one, step number 2 is to trade 100 standard lot size in gold using any account type, then hit the targets and win 10 grams of pure gold. Once again, very interesting. Trade 100 standard lot size in gold. You have a chance to win 10 grams. Now, we are going to have unlimited winners. There is not going to be a specific number of traders that we are going to award this promotion at. Now, we do also have the Battle of the Elite, whereby you have a chance to become Kenya's Don or Biz, claim the crown, win 650,000 Kenyan shillings. Number 1 is going to walk home with once again, $5,000. Number 2 is going to take home $2,000. Number 3 is going to walk home with $1,000. We are going to have 10 winners in the lucky draw who are going to walk home with $200 each. How do you join? Once again, you go over to your HF. Under the promotions, join Battle of the Elite and join the promotion. Now, for these, you have to deposit at least $100, which is equivalent to 13,000 Kenyan shillings. Trade any asset and rank among the top 3% traders by percentage wise. We are also going to have 10 winners in the lucky draw. Now, we do have a leaderboard. Look at this leaderboard. Very interesting. Minimum deposit is only $100, meaning if you join today and you make only $1.2, you are going to be on the leaderboard. Very interesting to note how currently, as it stands, Muitalan at Gmail does have 121%, quite achievable. If you can start today, there's a high likelihood you will be on the leaderboard. Now, getting over to today, welcome once again to the morning market call, whereby we usually start with the economic calendar. This is whereby we start our day. How do we generate our ideas from? You look at, we offer over 1,000 instruments to trade on our platform. Over 1,000 instruments that you can buy or sell, but you cannot be looking at over 1,000 assets. So how do you generate these ideas? When you wake up in the morning, you start with the economic calendar. Once again, go over to your HFM under the tools and education segment, then you go to the economic calendar. It's going to pop up this tab here. Let me zoom in so that we can see this information much better. Now, when you look at the economic calendar, you're basically asking yourself, like, what should I be looking at? Okay, and I'm here to help you analyze this information the right way. Now, when you look at it from the farthest left-hand side, you do have the time. And today in the morning at exactly 2:50 a.m., we did have the Japanese yen releasing their monetary policy minutes. This is very crucial. Why? When you look at the top forex participants, at the top of the pyramid is the central bank, okay? The central banks are the biggest forex participants. If they do have a meeting and then they release minutes of that meeting, for us as traders, we want to go through these minutes and see what they are going to do in terms of future economic outlook. Now, a mandate of a central bank, one of the mandates is to offer forward guidance. And if you do click on the title there, it's going to bring a short description whereby this is Bank of Japan or the BOJ, which publishes a study of economic movements in Japan after the actual meeting. Now, these meetings are held to review economic developments inside and outside of Japan and indicate a sign of new fiscal policy. Any changes in this report to affect the JPY volatility. Generally speaking, if the BOJ minutes show a hawkish look, that is seen as positive or bullish for the JPY, while a dovish outlook is usually seen as negative or bearish for the JPY. Now, if you do click on the official, read the official report, it's going to open a new tab, okay, which is going to take you here. Now, this is the minutes of the monetary policy meeting that was held on July 30th and 31st. Now, for Bank of Japan, usually they have these meetings closed door, and then they are going to release these minutes afterwards. And it's upon us as traders to look at this document, and I'm going to show you how you digest this document. Now, the document usually starts, once again, it's a minute of the meeting. You can see we do have the policy board members who are present. Now, the number one person to pay attention to is Ueda Kazuo, who's the chairman and the governor of Bank of Japan. Basically, this is the person who has the keys to the printing machine of the JPY. If they do say we are going to print more money, they are going to print more money. If they are saying that we are going to either increase or decrease rates, they are going to do so. Now, how this document usually starts is they are going to have a summary of where they are currently at the moment, okay? Where have they come from? And this is usually the start of the meeting, whereby they are going to look at, okay, starting from pre-pandemic regions, this is what has been happening. This is where we are currently, recent developments in the financial markets. Now, I don't want us to go through the entire document, and then they are going to look at where they are currently. So where they've come from, then where they are currently at the moment. Let's say, for example, when you look at part D, which is economic and financial developments in Japan, number one, economic development. So Japan's economy has recovered moderately, although some weaknesses has been seen in part regarding the outlook. Economic growth was likely to moderate as trade and other policies in each jurisdiction led to a slowdown in overseas economies and to a decline in domestic corporate profits and other factors, although factors such as accommodative financial conditions were expected to provide support. Now, when you look at the Japanese economy, they are net exporters. They do produce really, really good machinery. They do have a lot of exportations. Let's say, for example, the vehicle in front of you, there's a high likelihood it is a Toyota. Now, if they do produce these vehicles, they depend on other markets. Okay, if they depend on exports so much, them producing vehicles, let's take, for example, vehicles, is one thing. Now, they have to sell these vehicles to other markets. Now, if other markets are not in a good position, then it means they're not going to buy from Japan, which means it's going to affect them also. Now, in this particular case, when you look at Japan, the biggest export of Japanese products, and they do export to the United States. Basically, the US is the biggest consumer of JPY products. Now, when you're looking at this information, as a result of what is happening in other economies, as a result of what is happening in Europe, as a result of what is happening in the United States, it is going to affect the Japanese economy. Why? Once again, because they are very, very big in terms of exports. Let's take, for example, the effects of tariffs, and let's read through these documents. Now, exports and industrial production continue to be more or less flat as a trend, although there has been some front-loading and subsequent reactionary decline due to the increase in US tariffs. Regarding the outlook, exports and industrial production were likely to be negatively affected by the reactionary decline following the front loading due to the increase. Once again, key highlight here is increase in US tariffs, and were expected to be under gradually increasing downward pressure stemming from the slowdown in overseas economies. If other economies are slowing down, it is going to affect the Japanese economy. And this is the Bank of Japan governor, Ueda, releasing this speech, and he is acknowledging what is happening currently in the world, okay? Now, when you read through the document, once again, it's going to show you where they've come from, where they are currently at the moment. But for us as traders, the thing that we want to pay most attention to is the forward economic outlook. Now, once again, mandates, one of the main mandates of a central bank is to offer forward guidance. Where do you see the economy generally headed to? If they say the economy we are anticipating in the next 2 years to be good, it means we are anticipating the Japanese yen to be stronger. If you are a trader, it means that you need to be looking at more buying opportunities compared to selling opportunities. But on the other hand, if they do say that, okay, where we are currently at the moment, the markets are slowing down everywhere in the world, in tariffs we have been seeing impacting, and negative outlook, it means that we are anticipating the Japanese yen to be weaker. And I want us to go to the economic outlook. Now, here it is. Outlook for economic activity and prices. This is where we traders want to pay attention. If these are the biggest forex participants in the world, we will want to listen to what they want to do in the near future, because it's going to either reflect in buying opportunities or selling opportunities for you as a trader. Now, given that there were high uncertainties in various views regarding trade and other policies in terms of negotiations between jurisdictions and the impact of these policies on the economic activity and prices at home and abroad, members concurred. Keyword here is members concurred. Who are the members? Members of the Bank of Japan, from the perspective of clearly communicating the results of their deliberations to the public. It was desirable that they develop the baseline scenario in the July Outlook report, taking into account developments in negotiations so far. What are these negotiations? Bank of Japan, basically Japan came to the table and then they were discussing a few trade deals with the United States of America. Now, based on common assumptions, including the assumption that significant disruptions of global supply chains will be avoided, they also shared the recognition that the outlook for economic activity and prices could change considerably depending on the future course of trade policies in each jurisdiction and response of firms and households to the policies. Based on the above assumptions, members then discussed the baseline scenario of the outlook for Japan's economic activity. One, they shared the recognition that Japan's economic growth was likely to moderate as trade and other policy jurisdiction led to a slowdown in overseas economy and to a decline in domestic corporate profits, meaning companies like Toyota, Hyundai are going to receive lesser profits as a result of slower economic growth in other countries. Now, therefore, Japan's economic growth was likely to rise with overseas economies returning to a moderate growth path. Now, members discussed the impact of US tariff policy on Japan's economy, taking into account developments in negotiations between jurisdictions, including those between Japan and the United States, which was just concluded recently. Now, many members expressed the recognition that agreement in tariff negotiations between Japan and the United States represented great progress that would lead to reduced uncertainty regarding Japan's economy. One of these members noted that as tariffs had turned out not to be as severe as anticipated, particularly those on automobiles. Now, uncertainty regarding tariff policy had decreased markedly, and these had in turn made it easier for Japan firms to conduct their business activities. Now, some members expressed the view that the direct impact of tariff policy on Japan's economy might not be so significant, given that US tariffs had also been imposed on a wide range of countries and regions other than that of Japan, and Japanese firms were not necessarily at a disadvantage relative to overseas firms in terms of tariffs. Now, in addition, one member did note that in considering the impact of the tariff policy on Japan's economy, it was necessary to recognize that Japan's automobile industry had been reducing its share of exports to the United States in the long term. Based on these discussions, a few members expressed the recognition that it was important to closely examine the following points through sources such as firm earnings announcements and anecdotal information. Now, I want us to go to a very, very important piece of this meeting, which is here. whereby members then discuss the baseline scenario of the outlook for Japanese price developments, which is for the near future. Basically, they're going to look at CPI numbers, which is the consumer price index. They're going to look at the PPI numbers, which is producer price index. Now, central banks usually pay close attention to these numbers. And if these numbers come out positive or negative, they're going to take action as a result to maintain inflation being in between the 2 and 3%. Now, as a result of what they were discussing, the end result is what are they going to do about future monetary policy? And this is whereby, now this is the summary of these discussions. Based on the above assessment of economic and financial developments, members discussed monetary policy. Keyword here is monetary policy. At the end of the day, this is what runs the world. Now, with respect to the guideline for money market operations for the intermeeting period, members agreed that it was appropriate for the bank to maintain the guideline that it would encourage the uncollateralized overnight call rate to remain at around 0.5%. Now, many members expressed the view that although agreement in tariff negotiations between Japan and the US was thought to have reduced uncertainty, it was necessary to monitor the impact of tariff policy on economic activity and prices for the time being. These members continue that it was therefore appropriate for the bank to maintain its current stance regarding the conduct of monetary policy. One member said that even with Japan and the US reaching agreement on tariffs, the baseline scenario remained unchanged. Now, as a result of everything that was happening, they did decide to hold interest rates. And this document shows us why they did hold interest rates. Now, we would want to look at also future economic outlook, whereby as for the future conduct of monetary policy, what do they want to do in the near future, whereby one member expressed the view that there was not yet sufficient data from each economy to determine precisely the impact of trade policies. The member added that, moreover, it was possible that the direction of the US monetary policy and of foreign exchange rates could change significantly depending on developments in consumer price and labor markets. Now, we don't anticipate them. As a result of this document, one member noted that at least 2 to 3 months were needed to assess the impact of US tariff policy. Now, in the next 2 to 3 months, when the data still continues to come in, what is this data? Basically, this is CPI data and PPI data. If it continues to come in now, whether it's going to come out positive or negative, then this is going to affect what Bank of Japan are going to do with its interest rates. If they do hold interest rates or decide to increase interest rates, you anticipate a stronger Japanese yen as a result, okay? Now, if they do say that we want to lower interest rate, it means that they are basically weakening the Japanese yen, and this is good for them because, once again, they are major net exporters. Now, as a result of this document, we know that they are going to hold rates currently at the moment, meaning for the JPY, they should anticipate for it to gain strength in the short term, okay? Now, a very key interesting development in Japan still is that they are supposed to go vote on 4th of October, whereby they're supposed to bring in a new prime minister. Ishiba did resign recently, and they want to bring in a new person. Now, politics or the government usually affect a currency so much. Why? Because these people are the people in charge of putting these people into power. Let's say, for example, when you look at Trump and Powell, Trump was the person who appointed Powell, and Powell is supposed to act independently of politics. But they have the power to control where the monetary policy is going to go. Now, as a result of this information, for us traders, it's worthwhile looking at this information to ask ourselves, what do we anticipate in the near future? Now, this was the data that did come out at exactly 250. This was the report that was released. And then at exactly that time, we did have the corporate service price index, the year-on-year release, August. So this is going to be August data compared to last year, August, okay? Whereby it's also released by the BOJ, which measures the prices of services traded among companies. It presents prices developments that reflect most sensitively supply and demand conditions in the services market. It's also considered an indicator of inflation. Normally, a high reading is seen as positive, while a low reading is seen as negative. If you click on the read official report, it's going to open a new tab whereby this is the data that was released at that particular moment in time, whereby we did see the producer price index. All items did rise 2.7% from the previous year, while the services PPI numbers, all items excluding international transportation, did rise 2.8% from the previous year. Now, going back to the economic calendar, we are through with Asian session. The next part of our analysis is going to be Swiss franc, whereby in the next 9 minutes, as per the time of this recording, we are going to receive interest rate decision for Switzerland. Now, on June 19th, the Swiss National Bank decided to lower their interest rates to 0%, meaning bankers go borrow from the central bank at essentially 0%. If they borrow $1 million, they're going to pay back $1 million flat rate. This is what you call flat rate, okay? And this is very interesting when you look at the Swiss franc because of its banking system that has been in place since 1934. It attracts high net worth individuals as a result of their privacy policies. It attracts people who have a lot of money. And the Swiss franc, as a result, is seen as a safe haven. Whenever there's economic uncertainty in the markets, people usually flock to the Swiss franc. And I would want us to look at a chart of USD CHF before we are going to go deeper into the charts in just a moment's time, but I want us to point this out, okay? Now I want to go to the daily time frame, and I want to focus ever since the year did begin, which was around okay, let's take for example ever since 2022. So this is the dollar against the Swiss franc, okay? Ever since 2022, we have been seeing the Swiss franc gain aggressively against the dollar, but I want us to focus on this particular region here, okay? So let me zoom in my chart ever since January of this year. Now, when Trump did take office earlier, when he was officially sworn into power, there were talks of tariffs. We have seen Bank of Japan also note about the tariffs. Everyone was concerned about the implications of tariffs. And whenever there's uncertainty in the markets, investors usually flock to safer havens. And as a result of this fear in the markets, we saw institutions move a lot of their finances into the Swiss franc. From year to date, the Swiss franc has gained against the dollar almost 14%. So this is USD CHF. Huh? When it goes to the downside, it means basically the Swiss franc is gaining against the dollar, whereby the dollar has weakened while the Swiss franc has gained strength. Now, as a result of, once again, the safe haven nature of the Swiss franc during high uncertainty market conditions, investors once again flock to these instruments. Now, looking at it from this perspective, in the next 6 minutes, we are going to have the interest rate decision, whereby the previous number, as of June 19th, we did see them reduce their interest rates by 25 basis points, which took the interest rates down to flat, which is 0.00% essentially. The actual number has not yet been released. And if I do click on this monetary assessment policy, this was our 19th, whereby Swiss National Bank did lower its policy rate to 0%. And this is once again the document, similar to what we have just digested on Bank of Japan, whereby why did they do this? Where do they see the economy generally headed to in the near future? We want to look at also what the tone of the Swiss National Bank is going to have. As you can see, this is snb.ch, okay? So this is our official government document that was released at that particular moment in time, whereby they are also going to have, looking at the interest rates, once again, it was negative through the pandemic region. We did see them increase the interest rates up to 1.8%. This was in the period toward mid 2023, whereby they had their interest rates at 1.8 and then they started lowering it back to 0%. Now, we want to look at also the monetary policy assessment, which is going to be the report, which is going to be released in the next 5 minutes. Once again, if it does, the time does elapse, this document is going to be available somewhere below here, whereby you're going to have a chance to read on the official document and look at, okay, is it going to be positive or negative? Now, when you look at fundamentals is a very interesting topic. It's going to tell you where price is and where price should be. It's going to tell you a longer term direction. Should I be looking at more buying opportunities or selling opportunities? Then in the next 34 minutes, we are going to have the S&B release their press conference. Now, this is going to be the official speech. Now, they are going to read the report that is going to be released here. But what brings volatility is usually the question and answer, whereby as a result of this, after the speech, now there's going to be a period whereby the S&B is going to take in questions from reporters. And these reporters, they do have tricky questions, some of them. And sometimes whenever they ask questions, we see volatility in the markets. Let's take, for example, last year, even this year, last week to be exact, whereby we did see Jerome Powell, who's the Fed Reserve Chair, when he was having his speech, and then there were question and answer. Let's say, for example, what do you think about what will happen after you come out of power? Because his contract is due to end early next year. Now, if he's positive about the people who are going to come into power, then the markets usually react positively in terms of the dollar. Now, let's say, for example, last year there was a point whereby he was asked, how do you feel about your relationship between you and Donald Trump? And then the markets tanked almost 100 pips on gold at that specific moment in time. So usually the question and answer segment usually brings a lot of volatility. Now, towards the end of the day, we are going to have GDP numbers for the second quarter for the United States dollar, whereby the previous number was 3.3. We are having a consensus of also 3.3. The actual number has not yet been released. Now, looking at the United States economy, very interesting to note, the NFP numbers have actually come out really, really low. For the first time in 4 years, we have seen employment numbers come out below 100,000 consecutively, whereby the previous number was 22,000 jobs that was only created in the United States of America. Now, next week, we are going to receive NFP numbers, which once again is employment numbers, and we will also want to look at oncoming data and how this could affect the markets in the near future. Now, we could argue that analysts could argue the US market has been losing jobs, but GDP has been strengthening not significantly, but consistently, whereby, yes, we were anticipating job numbers to be lost, but the economy is sustaining itself relatively well. Now, when you look at the GDP numbers, once again, this is going to be the quarter-on-quarter release. So this is going to be the second quarter of the year, whereby it measures the value of the final goods and services produced in the United States in a given period of time, whereby the changes in GDP are most popular indicator of nation's overall economic health. Now, the data is expressed in an annualized rate, which then means the rate has been adjusted to reflect the amount of GDP would have changed over a year's time. Okay. We are going to look at this, and there's this article I would want us to look into, whereby the OECD, which is the Organization for Economic Cooperation and Development, on Tuesday raised its growth forecast for the US economy in 2025 on the back of investing in the AI boom, but noted that tariffs and lower immigration are taking a toll and will lead to slowing growth next year. Very interesting. Now, the OECD said it expects the US annual real GDP growth to come in at around 1.8% in 2025, up from its 1.6% projection in June. That, however, is well below the 2.8% GDP growth registered in 2024, and USD GDP is projected to rise by just 1.5% next year. We have been seeing the tech industry booming aggressively this year. When you look at the NASDAQ has been performing really, really good ever since the lows that was created towards the end of March, April, whereby we did see massive rallying. Actually, one of the best rallies we have seen in the markets for more than 10 years currently at the moment. Now, strong AI-related investment boosted outcomes in the US, the Paris-based body did mention, but also noted that GDP is falling from 2024. A strong investment growth in high technology sectors is more than offset by high tariff rates and a drop in net immigration, which takes me to the next segment of our morning market call is Mr. Donald J. Trump did release his speech on Tuesday at the United Nations General Assembly, whereby he did start this way. He had a full-time assault. This is the first time in 6 years. A full-on assault on the world body, which he described as feckless, corrupt, and pernicious. Global force that should follow the example of his own leadership. An inflammatory speech on the 80th anniversary of the founding of the United Nations, Trump called for countries to close their borders and expel foreigners. Now, recently, he just signed a bill into law whereby for any company, that is importing labor to the United States, they'll be required to pay $100,000 fee a year. So let's say, for example, if a company decides to take you into the United States of America, that company is required to pay $100,000 to the government of the United States of America. And he accused the world body of leading a globalist migration agenda and telling nation leaders that UN was funding an assault on their countries. Now, he did appeal to European leaders to embrace a blood and soil nationalism and follow his example. It's time to end the failed experiment of open borders. You have to end it now. Your countries are going to hell, as Donald J. Trump did quote. Now, what is the significance? For those who support the values of the United Nations must realize the degree to which the world superpower seems to bend on the destruction of everything they believe, okay? Now, Trump says he believes Ukraine can regain all land lost to Russia since 2022 invasion. Now, this was President Donald J. Trump and Zelensky after the meeting, after the General Assembly meeting. Now, this takes me to the geopolitical tensions that are currently ongoing, whereby Iran are starting to rebuild missile sites, but they're still missing key components, okay? These are satellite imaging, whereby this was the previous strike that was held on Iran, whereby they did destroy a few infrastructure. This was the place whereby they were producing the solid rocket missiles. Now, looking at the before and after pictures, as you can see, they have started rebuilding quite significantly, whereby they were facing damages. As you can see, this building right now has new iron roofs, meaning they are reconstituting the missile program, which is crucial for the Islamic Republic, which believes another round of war with Israel may happen. Now, the missiles are one of Iran's few military deterrents after the war disseminated its air defense system, something that Iran long has insisted will never be included in negotiations with the West. Now, missile experts obtain mixers is a goal for Tehran, particularly as it prepares for possible United Nations sanctions to be reimposed on the country later this month. Now, the sanctions would penalize any developments of the missile program. Among other measures, in an address to the UN General Assembly on Wednesday, Iranian President Masoud Pezeshkian blamed the Israeli attacks and separate US bombing of Iranian nuclear sites for dealing a grievous blow to peace negotiations. Now, they are missing these mixers. Some say that they could come from China. We would want to look at developments if they do build these solid rocket missiles, and they are very, very crucial once again in how they are fighting at the moment. If they do manage to get the infrastructure up and running, could there be another war? There's only one way to find out in the markets. Now, I'm going to conclude the news aspect. I want us to jump over to the news, the the price charts to be specific. Now, starting off with USD CHF, once again, we have been seeing the United States dollar lose against the Swiss franc for quite some time, ever since the year did begin. I'm looking at it on the daily perspective, ever since these highs that was made to where we are currently at the moment. In 168 days, the United States dollar has lost against the Swiss franc for a total of 13.72%. Quite interesting. We do anticipate the Swiss National Bank to continue holding their rates, meaning could we see potentially more short opportunities on the Swiss franc again, on the US dollar against the Swiss franc. This once again is on the daily time frame, whereby we have been making consistently lower lows, lower highs, lower lows, lower highs. We have just broken the most region support around this region. We did have a candlestick that closed below a short-term retracement. If we do get signs of buyers coming into the markets at this particular moment in time where we are, there is a high opportunity for us to take out the most recent low for a further continuation to the downside. Now, looking at gold has been very active of late. I want us to go to the 1 hour time frame, whereby ever since the highs that was created, now today is Thursday, this is Wednesday, Tuesday, there were highs that was created on Tuesday, and on this specific Tuesday at exactly 7:35 p.m., we had Fed Chair Jerome Powell releasing his speech, and one thing he did note was that stocks are overvalued. That was a very powerful statement coming from the Fed chair. Stocks are overvalued, meaning could we be seeing potentially very, very high prices of overvalued assets in the market currently at the moment? And as a result of that speech, we did see gold move to the downside. Now, it did form support around this region, a short-term retracement. This high failed to break Tuesday's high, and then the markets drastically yesterday, ever since London open around 10 a.m. Nairobi time, we did see prices aggressively move to the downside, and the day did close well below the opening price of yesterday. And today's opening price moved to the upper side. If we do get resistance forming around this region, there's a high possibility we might anticipate further continuations of the trend to the downside. Now, that's going to be on gold. I want us to look at S&P 500, which we are seeing a similar pattern, whereby on that specific Tuesday, we did see prices consolidate for almost 16 hours ever since the day did begin. For 16 hours, prices was consolidating, and then we had the PMI data coming in and the Fed chair speech afterwards, whereby he did mention that once again, stocks are currently overvalued, and we saw the markets move aggressively to the downside. Yesterday's opening price opened. Prices struggled to break to the upper side. We had signs of buyers coming into the market, but prices entered into a period of consolidation whereby we had smaller bodies and larger shadows. And as a result, we did see massive offloading whereby bears did come into the market, and the market closed aggressively to the downside, breaking the recent lows that was formed on Tuesday. Now, this is what we consider a change of character, whereby if I can look at it on a higher perspective, prices was forming higher highs, higher lows, higher highs, higher lows. But currently at the moment, we are trading well below these lows that was created on Monday. And this is a very interesting thing to note. Monday's opening price is here. We are currently trading below. Could there be further opportunities of the S&P 500 moving to the downside? Why? Once again, looking at the Fed chair speech recently, he did mention that stocks are highly valued currently at the moment. And looking at it on a larger perspective, you can see where we are currently at the moment. Prices are at an all-time high. Now, if institutions were buying low, they would want to sell high. Could we start seeing the selling opportunities as early as now, heading into the final quarter of the year? Now, that is going to be S&P 500. I would want us to look at the Dow Jones Industrial Average, which once again shows us a similar pattern whereby prices made a high, closed well below. This candlestick opened here, moved to the upper side to form a high, but this high failed to break the most recent high, and we closed well below. Now, looking at current price action, once again, prices opened, moved to the upper side to form a high. We are currently trading below the day's opening price, and we might anticipate further selling opportunities on the US 30. Now, looking at the NASDAQ, which is the Tech 100, similar pattern repeating itself, whereby once again markets have gone down to form a low, short-term retracement, and then the markets right now could continue further moving to the downside, depending on the data that we are anticipating. If GDP does come out strong, we might anticipate buying opportunities as a result, because when you look at GDP, this is gross domestic product. Now, when you look at the S&P 500, the US 30, the US 100, these are the companies that constitute the S&P 500, and if GDP is okay, it means these companies are also doing okay. Now, I do have a lot of assets on my watch list. This is whereby I would want you to engage with me. What are some of the assets that you would want me to look into? Talarin, hello. Thank you for being the first one to join. Hello, Victoria. You good? I want to join in fight. What do you want to fight, Mr. Zubair? Whom do you want to fight? You cannot fight the markets. Okay. Hello, Vicky. Thank you, Jeff, for the follow. Kenya, nice kid. Hello. If there are no questions, that's going to be it for me on this segment. I shall see you on the tomorrow's same place, same time. Take care of yourself. Once again, risk management is going to be crucial. At the end of the day, the most important thing for a trader is to have an account. Always ensure that at the end of the day, you do have an account. Once again, we do have the Shield 500. If you blow the account, we are going to refund you a total of up to $500 if you do open a Shield 500 account. Go over to the HFM website, look at the promotions that we are currently having at the moment. See you. Take care of yourselves. Till we meet again.